following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, and a little sprinkle, a little dash on top of some options fun to boot. My name is Mark Longo from the optionsinsider.com, as well as from the ever-expanding Options Insider Radio Network. And if you haven't had a chance to check out the latest addition to the old network, then I encourage you to surf on over to theoptionsinsider.com or to your audio provider of choice, iTunes, Stitcher, TuneIn, what have you, and check out our latest show, The Wide World of Options. We do that in partnership with the OIC, and they bring on a lot of great guests, discuss a lot of great strategies and topics, do a lot of educational insight, look back into the days of yesteryear from an options perspective. A lot of fun stuff, and that show is going to be cranking out on a regular basis on the Options Insider Radio Network. And the best part of it is I am not on it, so listeners, if you're tired of hearing my voice on all these various shows, then this is the program for you. I encourage you to check it out. Our friend Joe Burgoyne over at the OIC does a bang-up job hosting that program. So check it out. Again, the wide world of options. And of course, the world of options is very wide, so I need a big team to help me cover it. And joining me today on the all-star panel, starting off with the man holding down the Options Express hot seat over there at OX. You know him as the Viceroy. We here just call him Mr. Alex Jacobson. Alex, welcome to the program.
Another fun day in option land. Last half hour was everything today.
Yeah, but, another day when you could rip up your notes from pre-2 o'clock.
Yeah, it's I can literally tell by the noise level. I put the headset on for the show about 10 minutes early to kind of normalize. And last two shows at 6-7 minutes to the close, the noise level just went up. It was like the old days when I worked at the SIBO, and I could tell you when the OEX was active by the rumble coming off the floor. I never knew what direction it was, but yeah, interesting market today. S&P back up over 1620. I think a lot of us would have been happy if it had closed over 1610, but again, I think this tells you how thin markets are and how we're going to get these big swings. But today was interesting and a little more fun than yesterday.
Yeah, we certainly caught some tailwinds towards the end of the day, but we'll get to that in a second. Next up on the old Option Block All-Star panel, you know him, you love him, beaming in from the great town known as St. Charles, Illinois. He is none other than Uncle Mike Tusaw from RCM Asset Management. Uncle Mike, welcome back to the show, sir.
Always great to be here. And yeah, once again, if you could have slept in till like 2 o'clock today, and things would have been okay. You just watch the last hour of the day. That's all you need to do these days.
Yeah, I'm ostensibly on vacation, even though I'm hosting this show and doing a lot of other things. Very much a working vacation. But I did check in a couple of times earlier in the day, and I saw, oh, well, it looks like unched on the day. Not much going on, not much to miss, not much to discuss on the show later on. And, of course, I tuned in, start doing the show notes and things about an hour before showtime, and it was very much a different ball game, as it has been quite a bit over the past month or so. We have an interesting listener question that pertains to that very thing that we'll get to a little bit later in the show. But before we get to that, joining us, the last seat on the old All-Star panel, last but certainly not least, he is known far and wide as the Rock Lobster. Here we just call him Andrew. He is, of course, Andrew Giovinazzi, holding down the optionpit.com seat on the old panel today. Andrew, welcome back to the program, and welcome back from your travels to hither and yon.
Thank you. It was a lovely 2 weeks. You had Mark the A-Team back for the duration.
But you missed me
for my trip, huh?
You missed me while you.
I did miss you. Oh yeah, for sure.
And you missed this show. You missed all the fun stuff we do here on the old Options Insider Radio Network.
What's funny is when I close positions and then go on vacation, I just don't care about the market. So I basically, for 12 days, I didn't look.
It is kind of nice. It's refreshing.
Oh wow, things are different.
It's like the guy who's tied to his smartphone all day when he leaves the office. When he finally goes on vacation, he leaves it behind, or something like that. It's similar thing. I try to do that when I'm on vacation. Of course, days like today kind of makes that hard, but I still have to have one ear to the ground, if you will. But still, interesting stuff. A lot to get to. So let's get to it and dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we run down what was trading, what was moving, ye old markets. And as Alex alluded to, it was another bit of a schizophrenic day. If you tuned in throughout much of the earlier part of the session, you would have been forgiven if you thought this was a relatively mixed day, not much going on. I'm going to go out and hit the links or do whatever it is you do on a fun day when you're not in Florida and surrounded by a tropical depression. But, of course, towards the last hour of the day or so, we seem to get quite a lift in the old markets, with the S&P closing up nearly a full percentage point, or about 14 handles, to 1622. The Dow closing up about half a percentage point to 1540, and the good old NASDAQ splitting the difference up about 3/4 of a percentage point, or about 22.5 handles, to 3424 on the day. And the VIX cash, which had been dancing at some pretty impressively high levels, turned to the dark side, turned down nearly a point to 16.6. Let's start there, Andrew, as we are wont to do. I know the VIX cash has been on a bit of an interesting ride of late. Why don't you tell our listeners what, if anything, caught your eye, not only in today's activity, but perhaps over the last week or so while you were gone?
Well, I think the biggest thing was, and we're covering our pit report and things like that, is the fact that the futures were on trading underwater for the last 3 days. So, the market was, I think it's one of those cases, kind of like the fiscal cliff, where the market is looking for more of a move, but they're not ready to own the volatility after basically non-farm payrolls tomorrow. So it's just kind of that strange place in the market where, we're expecting a big move, or participants are expecting a move. They build up the VIX. VIX gets built up because index premium buying is kind of run amok. And but the futures, VIX futures, are pushing below the cash. And actually, let's see where they closed today. They closed 50 cents underwater yesterday. They're only 20 cents underwater now as of the close. So, things are starting to come back to kind of, I guess we'll call it an equilibrium somewhat, where the futures are should be trading higher than the cash tomorrow. We'll see after non-farm payrolls and where the VX, where the VIX starts to land. I'm actually trying to sell some put spreads I bought this morning in the aftermarket. I got 2 minutes left, and they are filling no one. I love just trying to get things done at the end of the day. But be that
always fun. Always fun.
Always fun.
Stuff done.
So not surprising. Actually, I looked at it, this morning in our vol, our 2-minute vol segment. Just talked about how vol was going to be bid all day until non-farm payrolls. It did catch a huge bid and then actually reversed when the market started to rally. It was real kind of a surprising rally on really nothing. We thought we saw some European news. The euro was sort of bid and things kind of went topsy-turvy. And then Europe closed, and I think they started buying stocks again in the U.S. So it's kind of sort of, back to the future type of trading we had last year, where the Europeans are in town. They're all bitter and depressed. They sell everything, and then they all go home at some point. And then everybody's like, oh, there's a fire sale. We'll go buy it up. And that's what it felt like today.
I think I know why the market really turned around towards the end there. It's because McDonald's made the announcement that they are going to, in certain 24-hour stores, start selling breakfast items after midnight. If that's not enough to spark a rally, the fact you can get an Egg McMuffin now at midnight, I don't know what is. That's just that's quality business for anyone out there who is a fan of the finer breakfast dining options over there at McDonald's. I know, Tusaw, I'm sure that excites you quite a bit.
Well, I hate to admit it, but McDonald's breakfast is a guilty pleasure of mine. The rest of it, though, I'd rather eat sawdust, quite frankly.
Yeah, that's why I'm amazed they haven't taken this step earlier and made it just breakfast 24/7, because that, to me, I think would just drive a lot of people to the stores, myself included, who otherwise are not really big McDonald's fans. But good old sausage McMuffin or two, I've never said no to one of those. Now, Alex, same thing to you.
Hold on a second. This is an important topic here, because
yes, sure. Very important. Let's dive deep.
Well, we're actually very spoiled in the Chicago area to have something called Portillo's. So if you're ever in Chicago, if you ever get a chance to go to a Portillo's, there's nothing better in the whole fast food world besides Portillo's. Now, Portillo's does have something called the Honey Jam Cafe, which they also own, which is excellent breakfast food. So I'm more of a Portillo's man. I go for quality greasy cheeseburgers and Italian beefs and that type of thing.
Best chocolate cake in the state of Illinois.
Amen, brother.
At Portillo's, but there are better hamburgers and hot dogs, but would take too long on this show.
Agreed.
Yeah, for all of our listeners who are not in the Chicagoland area, they have not had a chance, really. I think there's a couple of Portillo's, I think one in California and a few other areas, but really they're mostly located in and around Illinois. So if you have a chance to come to Chicago, certainly worth an effort to check them out. This show brought to you by Portillo's. Check them out at your local Chicagoland area. But Alex, I know you said the noise level picked up. What, if anything, caught your ear over there in the cacophony at OX towards the end of the day?
People covering their spider puts. That was a big part of what was going on today. Lots and lots of folks had bought spider puts, and I can't get too detailed, but basically a lot of people had, bought insurance at $1 or $2, who during the day today were getting out at $6 and $7 before the market turned around and rallied. And I think that's kind of a good sentiment indicator that a lot of the insurance trades came off today. The name I heard most on the desk today over and over again was Spider. The only other two names that came up today were Regeneron, the biotech, and Tesla, when it traded back up around par, was lighting up some of the phones again. Didn't hear a lot of Apple, even though it had a big move today to the downside. Didn't hear a lot of SPX. Just seemed to be Spider was the dominant conversation today.
Taking off SPY puts, that plays right into chapter 2 of the Andrew Giovinazzi book of doing stuff. That is, if you have a hedge and it makes some money for you, take it off, take the money and run. But you're right, Alex, that is an interesting sentiment indicator as well, seeing a lot of the active OX clientele really deciding, and looks like it was a smart play today, definitely, to take some of that money off the table. The hedge did its job for you. Take it off and let your underlying make some money for you as well. So interesting stuff. Andrew, we joked a little bit on the last show while you were on vacation, Andrew, about the old Zynga apocalypse Of course, the news that has been unfolding at Zynga lately has been somewhat dire. They're slashed, I think, 18 or 20% of their workforce, cutting a lot of jobs, and their games just aren't really moving the way they used to. The player count is down. The number of people who are actually buying things in their games are down. We had a lot of listeners writing in, I think, and who were concerned about you as well, Andrew, because I know you had extolled your deep, deep love for some bullish risk reversals in Zynga. But you did indeed swap those out for some straddles of late. So why don't you walk our listeners through your Zynga odyssey? I believe those are actually some of the puts you're trying to get off right now as we speak.
I was able to close nothing at the close, which is always my doing things for clients first. And then I'm like, oh, I got stuff I got to close. And then I'm like, oh, geez. So what I did was, real simply, I had risk reversals in Zynga. They worked out pretty well. But the volatility got so low, it just wasn't worth selling a put in there anymore. You just weren't getting anything for it. Risk, when you have to do the risk reversal and pay money, you know how that makes me skeevy.
It makes you gag.
It does. So like, well, that's cheap enough. I'll just buy some straddles and trade it. And that's what, we did. We had that as a trade in our strategy letter at Option Pit, and traded back and forth, and, it gapped down, and it, worked out okay. So it just, you're lots of ways to be long something, a lot of ways to be long, as long as volatility is cheap enough. So, and I would not recommend that for most stocks because you'll probably get your head handed to you. But in that case, it's hard to lose on 50 volatility or 60 volatility in a $3.50 stock.
That's funny. That's the reverse of the narrative we were talking about earlier in a lot of names where, there was incentive to write the put, but you kind of had to wait to see if it was worth buying the call end of the risk reversal. Sounds like you flopped that completely or flipped that completely on Zynga and decided it wasn't worth writing the put. And since you're going to buy a call, might as well buy that at the money straddle because it was a juicy, juicy buy. Now, Alex, I'm sure that deeply offends you, the notion of buying a straddle on a $3 stock.
Well, if you want the downside, it's kind of the only way to do it. I mean, the play I like, if you're going to trade something that low priced, is do the delta neutral spread, buy the stock and buy a couple puts. That way, at least, you can trade the vol and you can trade around it. But, when you're down around $3, if you really want to trade the vol, you don't have a lot of choice other than buying the straddle. What I don't like, obviously, is buying, long dated or out of the money calls on that inexpensive stuff because you're just better off owning it.
Now, of course, Zynga closed today at $2.85. They were relatively unched on the day, but they did get as low as, I believe, $2.73 at one point. And this, of course, is about $1 sell-off from where they had rallied up to nearly the four handle for a while there. It looked like the worst was behind Zynga. They've since have come out and just shown why they're very much a poster child for why you shouldn't go public if you don't have to, and why the race to go public and all that encompasses can be very much a downside or a detriment for a lot of these firms because it leads you to do things like acquire an app maker for $100 million in essentially worthless stock now and things like that you probably shouldn't be doing or to be diverting your resources toward, and instead building your core business, which was obviously flagging, even though they had no idea about that at the time. So a lot of interesting things. We saw that race to IPOs last year. It seemed like we were getting into a 1999, 2000 era mindset again of everyone's going to go public, and then post Facebook, post Groupon, post Zynga, I think a lot of people are taking a second long look at going public and whether it's even worth it for that. Of course, unless you're Tesla, and then you can do a secondary offering at 3x or 4x what your IPO was, then it might actually work out. Of course, Tesla, another one that just had quite the rally today, up another about 2% or two handles on the day. This name has just been all over the place lately. I'm sure, Andrew, this has kind of just been lighting up your pit report lately, and just there's so many lessons that Tesla encompasses right now. It's kind of hard to know even where to begin.
I know, actually, Tesla was going to be the subject of a blog of mine because the borrow rate on the short has come in. like we just totally, normally we don't, but we bought a spec like put fly, and it's basically worthless now. It has 3 weeks to go, but it was Tesla just launched literally right after we bought it, after kind of like the first, second, or third short squeeze. I can't even remember now anymore. But the borrow rate in June is like almost parity, and July is only like 40 or 50 cents. So, whoever needed to cover has covered quite a bit of stock. So what I'm interested to see in is, I got a lot of respect for the Elon Musk guy. He's clearly a really smart dude. But ultimately, these guys are making cars, and it takes a long time to make money making cars. So, I guess it can stay up. It can stay up here for a long time. I just don't see how it does. But we'll see. But the short interest has finally started to come in substantially. So I'm very curious. It hasn't been able to make those crazy moves up like it was moving when the buy-in was so fierce. So yeah, it'll be interesting to see now. When it has a big move, it's like up $2 now or something like that. So at some point, they just had that secondary. And we'll see how long the support for the name can last, but probably at least through the month of June, because that's, I'm sure, when our put will expire.
That's the best indicator.
That would be my guess. I would say
that's the best indicator. Wherever your hedge expires, yes. Whenever your hedge expires is the day the downturn, or the day before the downturn will happen. Of course, that's pretty much the best indicator I've ever seen for when the turn will come. Of course, Tesla. That front month straddle right now trading looks like about $12.5. That works out to about an 80 front month implied vol. That actually can't say it's cheap, but compared to what we've seen moving out there, it certainly has come off quite a bit to what we've seen of late. It's interesting to see the notion that the secondary offering they did actually, in many ways, not only did it make them a lot more money, but it also kind of seems to have paved the way for the stock to continue rallying. It got a lot of that kind of those shorts kind of out of the way a little bit. And it seems to have perhaps positioned them, if they are going to keep moving forward, it kind of got rid of some of those roadblocks. So interesting ancillary benefits. I'm sure that was part of their equation when they were putting that out there in the marketplace. But of course, Alex mentioned the big move in Apple. That brings me over to two-saw territory. Perhaps we need to have a segment of the trading block called two-saw territory. I like that.
Ooh, I like that.
We'll call it'll be Apple, GLD, Ford, and whatever else you're currently fixating on right now. So let's give us a quick walkthrough of two-saw territory, Uncle Mike, and what caught your eye in today's activity.
Got it. Well, with Apple, I'm holding off on it till after tomorrow. I want to see. I'm fairly flat across the board. I want to see what happens tomorrow before we jump into anything. So we ended up about breaking even on our diagonal credit spread adjustment, whatever that you want to call it, a couple weeks ago. And Apple's starting to look attractive again for doing some type of a credit spread below it. I really think it's going to stay around these levels for a while. And as I've said before, I think it's the next Microsoft, and that I don't see it going back to 700, but I see it kind of staying around this same area. And I think premium is enough to where it's justified and selling some premium on it. So with that in mind, I'm waiting until suppose I can come out from underneath my proverbial rock tomorrow after the announcements, and we'll see what we can do with Apple.
And I know you said before that you feel like you kind of missed the move in Ford. Of course, Ford gapping a whole handle a day, it seems like, lately. Has any of this volatility brought you back into consideration on Ford? Maybe using some credit spreads or something to perhaps leg in? Or are you still waiting for a more aggressive retracement before you start thinking about that?
I want to see a more aggressive retracement. I'm not going to. I've chased in the past, and sometimes chasing works out, but I'm not going to chase this one. I'm not quite that fast enough.
Yeah, I hear you. Ford has certainly been on quite the run of late, nearly doubling over the past year, and a lot of that coming over the last few months. And this thing is starting to really, really get some aggressive vol out there where it's starting to move 50 cents a handle a day sometimes. Certainly not the Ford we knew for quite a while, vacillating in between the 8 and 11 range and not really moving a whole heck of a lot intraday, not really exhibiting a lot of volatility. All of a sudden, starting to become a little bit more active, which I know for a lot of our aggressive options traders out there, particularly on the premium selling side of the fence, that tends to make them take a second look. And speaking of second looks, it is time for all of us here on the Option Block All-Star panel to don our fedoras and take a second look at the dark side of the options market, because it is time once again for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the program where we talk about the interesting and or the unusual options trades that are lighting up our tape today. I'm going to kick things off with a good old Odd Block special. Sometimes I think you guys pull these ones just for me, Andrew, because they are so very clearly Odd Block specials. We're going to kick it off with Savient Pharmaceuticals Inc., ticker symbol SVNT. Yes, this is a sub $1 biotech, listeners, a 77-cent biotech. I can hear Alex cringing right now, who in the name of God is trading options on a 77-cent biotech. Well, as you might expect, before we even get into that, this is a name that's doing, of late, about 600 contracts a day, so not exactly lighting up the old tape, as you would expect from an options perspective for such a cheap stock. The stock is essentially an option at this point, yet we saw about 5,500 contracts going up today. A lot of those actually come in these Jan 14 one calls. I love saying that, the one call. I'll buy some one calls, please. The $1 calls. There's just something strange about that. I don't know. It's an odd. I think when you're saying you want to buy the one calls, you probably need to reconsider what you're doing. But that aside, tell us what really caught your eye about this one today, Andrew.
Just the fact the stock is in the dustbin. It was huge volume for the name. I mean, it's not really trading anymore. I almost saying that like this is kind of, I'm feeling like this is a savvy guy, not that he's, that he might know something, but I think you spend 9 cents for options that you're buying September options. So you have plenty of time. For 9 cents, you could buy the stock for 75 cents. But you can buy a whole lot of calls, and obviously somebody's expecting some kind of decent news for this. But this is a company that's basically just in the dustbin, and looks like it's probably going out of business. The only other interesting thing is I do not think this was closing paper. It looked opening, way more than the open interest. So somebody just taking speculative, a real spec trade on this company being able to get a product out there. So, and they're early. It was enough to make the vol go up a little bit. Again, just, you're buying calls, the vol goes up. I always find that interesting. Always interesting because there just is not the liquidity there to supply the person. So,
yes, these are
good old-fashioned buying.
Yes, good old-fashioned buying in the SEP ones. About 3,300 of them went up for 9 cents on open interest of just 1,800 contracts. So clearly opening, and it's not as outlandish as you might think when you start looking at an actual chart here of SVNT going back a little less than a year, actually, to September of last year. They were trading $2.50 and got up to almost $3. So if this guy is right on his timing and it kicks in again about a year from when his calls are about to expire, then these 9 cent calls could actually be trading for a fair amount. And you never know, these biotechs, these things pop on no news whatsoever. So an interesting one to watch. Certainly a substantial amount of size. Of course, relatively cheap stock, relatively cheap options. You have to take those into account when you're looking at any size in the odd block, but still an interesting one. We'll file this one as well under the keep an eye on this one for later, because someone putting on this one, it could just be a flyer, or it could be someone who actually has some knowledge of this name and thinks we're heading back to the $3 range, in which case.
Yeah, and it's made that move out of the bottom from like 55 cents into like the mid 70s. So, somebody's accumulating it. What do they know? I don't know, but somebody is accumulating the name. So you could spend money on worse things, I guess.
Yes. Like Zynga. But hey.
like Zynga. I'm back to even, by the way, on Zynga now.
There you go. I love it. See, doing stuff can pay benefits for you too, dear listener. If you're aggressive and if you can get your puts off at the end of the day before the market closes and you have to do a radio show.
Put the Kool-Aid down.
Yes. Put the Kool-Aid down, get your puts done, and then do your show. All right. Next up on the old odd block, we have Dole. We talked about Dole a few times in the past. Of course, I make all those various foods, Dole, pineapple, and whatnot, closing today at $9.81, up about 5% or about half a buck. So it was a banner day for Dole. And from an options perspective, it certainly was. This is the name that's doing about 1,400 contracts a day, doing a whopping 40,000 contracts today. Just ton of size for Dole, ton of size. And pretty much all of this coming in just an enormous unwinding of a collar here out in July. Andrew, why don't you walk us through what this guy took off today?
Right. Well, number one is there was huge open interest in both the strikes prior to. Coincidentally, about the exact same amount as what traded today. So for all you sleuths out there.
Yeah, it's always a good starting point there.
I'm like, oh, wow, okay. And clearly the guy looked like he was buying the calls back, and somebody paid him a nickel for the puts. So to me, the offer was the other side of the trade was probably set up. And I just think this is a guy long some stock. He unwound his collar. Dole's made a little run. He's maybe made some money, maybe sold his stock out, or he's keeping the stock now that he's, pretty seriously in the money on the trade. So it also could be a sign of maybe he knows something more than we do, and Dole might be set to run a little bit. So he wants to, as Mr. Tusaw would say, maybe not sell the calls right now, just sort of being long and enjoying the ride on the Pineapple Express.
Yeah, Dole's had a bit of a run. This is, of course, the July 10, July 8 collar that he's unwinding. Dole closing today at $9.81. So it's just starting to brush up against that 10 strike. This could be a bullish sign that this guy thinking that it's a time to unwind this straddle and let Dole run a little bit. I didn't see any size underlying going up that would look like he unwound the entire position. Looks like he just took off the option portion of it, in which case that would be indeed a bullish sign that he thinks Dole is going to run. Maybe he's looking to restructure it again up in the 12-10 range, something along those lines once Dole runs a little bit. But either way, interesting bullish sign. If you're trading Dole, might be certainly something to keep an eye on. Certainly the most volume Dole has seen in quite a while. So a lot of canned pineapples going up today in Dole. Next up, we have newcomer to the odd block, Tessera Technologies. Sounds kind of like Tesla. That's probably why it's getting some love today, or love to the downside, I should say. Ticker symbol TSRA, closing today at $20.41, down about 30 cents or a little over 1% on the day. This is the name that does about a whopping 200 contracts a day, doing about 5,000 today. A lot of this looks like it came in a horizontal roll. The June 18, July 18. This must be one of those names that did some crazy split because it's got crazy strikes. These are the 18.7 calls. You don't see that every day. So he rolled from the June 18.7s to the July 18.7s about 2,000 times, and he did it for about 15 cents collecting on a credit. So it looks like a buy rider thinking there's more room to run out here and rolling it on out to July. Is that your take as well there, Andrew?
Yeah, I mean, the stock has made a pretty big run. From October, it was $13. Now it's 21. So I think it was like kind of an aggressive buy rider, or it wasn't aggressive to begin with. It's run up to the strike. And, with the market kind of like it is, they're going to keep that short call and they'll just keep rolling it and just taking the wee bit of premium they can get for the spread and holding on to the stock. And maybe at some point when they are a little less nervous, they'll close the short, deeper call and then sell more out of the money one again. But that's again, we used to see that all the time. The stock runs a little farther afield of where people expected, and now they just have to kind of deal with the role they have. So, and he might certainly get a chance to buy back those calls cheaper. So, that's what it looks like to me. Kind of a vanilla guy that had a stock position is just rolling his option position out.
Yeah, about 2,100 calls open on these June 18.7 calls. I just love saying that. It's June 18.7s.
Yes.
Not 18 halves, not 19s, 18.7s.
It's like a flex strike.
It is. It very much is.
I want to create this
strike.
exact strike.
That's probably your first warning signal not to trade this thing. It's got absurd strikes. But that aside,
I would check what the underlying is or what the underlying makeup is. Who knows? The contract could be a little goofed up. Who knows?
Yeah, when you see strikes like that, there's usually something wonky has happened in the past, and you definitely want to make sure you have a handle on every single corporate action and split and thing that has gone on in this name before you dive in, because you don't want to be caught unawares with a special $4 dividend or a reverse 3.5 to 1 split or something else weird that's going to happen out there, or maybe this happened recently that's going to throw all your positions out of whack. But
yeah,
speaking
it's a
of
very interesting company, though. Kind of funky, like they have some intellectual property. Is that the patent troll business, and then they have 3D packaging solutions, which is kind of, I don't know. It's it's an interesting it's an interesting bucket of technology. That's all I can say.
So they're patent trolls. That's why they have such crazy strikes, because everyone knows patent trolls are crazy to begin with. So that's why they have such crazy.
They pay a dividend, but don't really make money. It's just I don't know what's going on, but it's
all kinds of red flags jumping up on this one here. Okay.
But anyway, somebody's piling in.
Yeah, someone's piling in. Someone likes it. Someone's rolling 2,000 calls out to the July strike. So take that for what it's worth. We're going to take that as a sign to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. This is, of course, the portion of the program where Mr. Alex, a.k.a. the Viceroy, takes the reins, and I take a bit of a rest. So, Mr. Alex, what was catching your eye? What was lighting up the old tape? What was going on behind the scenes in the land we affectionately refer to as OX?
So, as we talked about earlier, a lot of hedges seem to be coming off today. We also saw, I'm going to sort of revert back to the idea hub here, saw a number of premium harvesting ideas start clicking back up into things like the Russell and its spider counterpart. The increase in vol sort of puts things back on the radar screen. The hub searches for credit put spreads, credit call spreads, and iron condors, and then filters them. So you only look at things above a quarter. But for those people who like to trade weeklies, and weeklies have a ton of traction now. Weeklies are so mainstream that it almost doesn't pay to talk about them as a separate option anymore. But with the Russell around 980, one of the ideas that lit up today was credit put spreads, credit call spreads, the iron condor, 30 points out of the money, $10 wide, trading about $1.70, which is quite a bit of juice for the week. Those would be expiring a week from tomorrow. So some of that juice obviously relates to the job numbers tomorrow. And clearly, I think the focus, everyone's attention is going to be looking at those job numbers tomorrow. And I'm kind of surprised that the VIX actually came in today. I thought the VIX would have, at least the cash VIX, would have held a little more juice with the job numbers tomorrow. But the job numbers are surprisingly good tomorrow. This market is going to probably get back everything it lost in the last week or so. And if they're disappointing, it's going to be bloody. So that's what's going on here at OX.
I'm sure a lot of that VIX, of course, dovetails with people closing out their hedges that you were talking about earlier, in the SPY and SPX and whatnot. People taking their hedges off the plate with this rally that, of course, is going to give us a little bit of a drawdown in VIX, even ahead of an event like tomorrow, where a lot of people usually want to keep their powder dry. If everyone's unwinding their hedges, c'est la vie. Of course, perhaps that's far too rational of an interpretation for VIX. We've all known VIX is a little bit more off the wall than that, particularly of late.
Yeah, the great thing about weeklies is tomorrow's going to be real interesting because you get the numbers. You'll have a weekly expiration tomorrow. I think it could be I don't want to use the term wild day, but I can't think of a better term. And it wouldn't surprise me if the job numbers are good tomorrow. We pick up 20 or 30 S&P points. And if the job numbers are real disappointing tomorrow, we lose 20 or 30 S&P points. It's not a hard forecast to make. The interesting thing is if the job numbers are kind of gray tomorrow, how that's going to get spun. And it'll get spun a lot in terms of what Bernanke is going to be expected to do with those numbers. Tuesday or Wednesday, I did a webinar from Casa Jacobson. I did an evening webinar, and it was the day that the hawkish Fed member Esther George had been quoted on CNBC with obviously some hawkish comments, and the market took a tumble. And of course, what happened at 6:00 at night is CNBC came back on and said they released the wrong speech. And what they had released had, in fact, been an older presentation of hers. But I think that tells you how anxious the market is in terms of trying to spin what the Fed's going to do next. And that's what we've had for the last week and a half. It's all been people spinning Fed speak. So there'll be a laser focus on that job number tomorrow.
Yeah, weekly expiration, thin, lightly traded summer markets, non-farm number. What could go wrong, Alex? It's a recipe for a quiet day.
Yes, nothing could go wrong. You know what? I'm not even hearing activity on earnings. Lately, it's just all the market. That's all people want to talk about is the Fed, the yen, what's been going on with the Nikkei. Even Europe isn't getting that much spin. I'm not saying Europe is irrelevant, but I kind of look at this in kind of a binary fashion. What the market does in the morning is when Europe's open, and what it does in the afternoon is clearly the Asian influence. It's not really that clean because in a world of 24-hour trading, nobody really closes. But the rally today looked like it had a lot to do with what was going on with the yen and what was going on with the Nikkei.
All right. Thank you for that, Mr. Viceroy. You can now put your cap away until the end of the show, because now we're going to keep on rolling right on into our listener mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, and welcome to the mail block. This is, of course, the portion of the show where you guys get to chime in and make your voices heard. And today's question comes from John King via Twitter. It's an interesting one. He says, have you read the theory that the Friday's sell-off was due to delta hedging by SPY put sellers. Hashtag your 2 cents, please. This is an interesting question. It's something we've discussed off and on a few times on the network recently. It seems to be a growing interest in this negative gamma and how it correlates to the end of day swings we've been seeing quite a bit. And the article he specifically refers to talks to the sell-off we saw last Friday and how in the last 30 minutes of trading accounted for about 100% of the weekly loss in the spider up until that point. And the bulk of that really happened when the SPY broke through 165 strike and started getting towards the 164 strike. There was a lot of open interest on that strike. And of course, all of our listeners out there know that with a lot of that open interest being put sellers, the negative gamma starts to kick in, particularly on expiration Friday. Gamma obviously exploding on an expiration Friday afternoon. As you're getting close to that short strike, I'm sure a lot of risk managers were kicking in and saying, you know what, we need to take some of this risk off the table. We need to sell S&P futures or SPY or what have you against this to hedge some of this negative gamma. And that, of course, contributed to the massive sell-off we started seeing, particularly as SPY broke through that 164 strike and continued to sell. That's when I think a lot of the risk managers' flags went off. And they said, you know what, we need to shut this down and take that off the table. So all these guys that went out there looking to harvest a little bit of premium ended up, if they were fortunate, hedging that negative gamma prior to breaking through that strike. If not, they probably took a little bit of a hit that day. But, you know, we've seen this a lot, John, and it's a growing area of research in terms of how negative gamma plays into those end-of-day swings. I personally subscribe to a lot of it. I think it's a very, very interesting and very viable description for what's actually going on at the end of the day in the marketplace. And I've talked about it a lot on the network. I'm curious what you guys have to say about it. Let's start with you, Andrew. What do you think of this interpretation of last week's sell-off and also just the impact of negative gamma and negative gamma hedging as it relates to these end-of-day swings that we're seeing?
All I can say is, sure. I mean, you've been in the SPX, when people have been dumping futures or, I didn't trade the SPY, I traded the SPX, but sure. And we see it in the VIX and with the VIX futures at end of day, trying to buy guys trying to hedge VXX positions or something like that. So that liquidity can always be overwhelmed if there's just enough of it. So all I can say is it's certainly possible. It happens all the time. It was part of the crash of 87. And if we have learned anything is that things don't change. So if they were hedging short gamma then, they're hedging short gamma now.
Of course, things have been exacerbated with the advent of the weeklies now because we now have expiration every Friday. And in the past, that would have been really only that dramatic on that one Friday a month where we had expiration. Now we have these weeklies, so every Friday we're seeing exponential gamma, exponential theta, and people having to really scramble to cover that. So I think that's playing into this narrative a little bit too. People are scrambling because of these expiration Friday gamma explosions that they otherwise probably wouldn't have been seeing. Mike, what's your take on this impact of negative gamma and some of these end-of-day vacillations we're seeing happening right now?
I can see it happening, especially with the weeklies coming in. I wish I could work 24 hours a day. Now, my wife will say, well, you do that anyway. But I really think that me personally, I hate going into a weekend short options or short puts. I'll do it, but that's probably the thing. That's my biggest fear in all of trading is going into a weekend short premium, just because you never know what's going to happen. And the same, I don't like going overnight short premium. I do it, but that's the part where I'm not in control. Now, granted, you can have an intraday gap down or something along those lines, but the uncertainty that exists on that is something that's of great fear to me. And for someone, if it's to be of great fear to me, and by great fear, I have things managed in the right way to where even if the apocalypse happens, we'll be okay, so to speak, and there's plans for that. But when you get it to the higher levels, when people start doing this in the billions of dollars, I agree with Andrew on this. Sure. It's definitely something where you have to respect that. And when vol goes up, it's something that you never know what's going to happen. Like I remember on the day of the flash crash a couple of years ago, when the S&P went down 100 points, Dow went down 1,000 points, and then right back up again. I remember putting in a market order, and this was for a client. We weren't managing his money. He was just a client, and it was a 50 lot on RUT. Now, it was a 50 lot in that he wanted to get out of it. He's like, just get me out right now. I put in a market order, and you'd think that something like that could fill pretty easily on a market order to close out a short put option. It did not fill for about 15 minutes. So finally, the market comes back, and then the same client called. He said, is there a chance that I didn't get filled on that? I'm like, you did not get filled. He said, cancel the order right now. So I canceled the order right there on the spot, and that saved him 50 grand. So things like that always concern me. So if it concerns me, it concerns people with a lot deeper pockets, I would think.
It must have been a very relaxing and restful 15 minutes, Uncle Mike.
Well, all my stuff was hedged, so it's actually kind of gratifying, to tell you the truth.
It was a client getting a lesson in the marketplace, if you will.
He lucked out, and that was one that after that was over, we gained a lot of business that day because people didn't make fun of our collars quite so much anymore.
That's true. That's true. It's a good selling point for a collar guy like you. Alex, I'll toss it to you as well. Do you fall into the sure camp as well on this?
Yeah, but I think it's more than the sure camp. I think it's last Friday was the end of month trade, but there's so much trading in ETFs and ETNs now that the amount of rehedging that has to be done in that last 15, 20 minutes is just phenomenal. And, it's the old expression about market making. It's picking up nickels in front of bulldozers. Look at products like the VIX. A phenomenal amount of the trading is the ETNs rehedging in those last few minutes, and that's going to pull the market around a phenomenal amount. Andrew talked about the 87 crash, and what it really was a delta hedging inspired crash, and there's no argument there. Every sort of post-mortem of the 87 crash essentially said that was the key contributing factor. There were other things, lack of cross-margining and lack of communication between the exchanges, but you got to be very cautious in that last 10 or 15 minutes of the day if you're trading something that has a large ETF or ETN. And in many circumstances, Spider has, last time we looked, 130 billion. So imagine the rehedging that has to be done. VIX, we've talked about the ETN is generally the third or fourth most actively traded ETN. That means there's a phenomenal amount of rehedging that's got to be done at the end of the day. And yeah, that's going to push the market. And delta hedging means that small moves down can become big moves down, and small moves up can become big moves up. So I'm in the yes camp. But I think it's more than yes. I think that's just a fact of life now with all the ETFs, ETNs, and the high-frequency guys that just pop onto the stuff as soon as it starts to move.
So that's the answer to your question there, John. A resounding sure for the most part. But of course, the landscape has changed quite a bit over the past decade or so with, like Alex said, the explosion of ETFs and ETNs on these names and all the recalculating that has to happen, the advent of weeklies and more short duration type contracts that exacerbates the gamma and theta situation on these expiration Fridays. So I think if anything, we're going to be seeing a lot more of this going forward as the impact of negative gamma becomes more pronounced and it starts to impact the market that much more dramatically. But that's all the time we have for the mail block. And now we're going to keep on rolling right on into our final block, Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, where we talk about what we're all watching for the rest of this week into the old weekend. And as we've touched on several times in the show, it's pretty much a non-farm story tomorrow. Non-farms. Of course, by the time you listen to this, the story will have been played out, and you'll know whether we were right or wrong or just being quite silly. But yes, it is very much a non-farm story. A lot of people keeping their powder dry going into that number. We could have a very pronounced sell-off or a very pronounced rally. I kind of lean toward one extreme or the other. I don't know if I see much in the middle ground there, but we'll see. We'll see tomorrow. Uncle Mike, what is catching your eye tomorrow aside from the old non-farms?
The employment report. So pretty much nothing. That's pretty much what I'm focused on. At 7:30 in the morning, I am going to be tuned in and bright-eyed and bushy-tailed, excited for being able to see what's going to happen. I can hardly wait.
And then at 7:45, you're off to hit the links, right?
We'll see, or I'll go off to the bank maybe they'll give me a loan or something. I don't know, one of the two.
Cashing in all those puts, doing the old hair trade, and heading off on the blue line.
There you go.
All right, Andrew, what is catching your eye in tomorrow's activity, sir?
Pretty much the same thing. Hopefully, I won't regret not trying to get filled here at the end of the day, but generally, I end up, when I don't get filled at the end of the day, I do regret it the next day. So we'll see what happens. But I'm not quite sure why we had the rally today. Maybe the old dead cat bounce. The thing with the employment numbers is they've just always been okay. They really haven't been great. The ADP report wasn't great. I don't know how anybody can think that the number is going to be great anyway. So it's probably just going to, I don't know, who knows what it's going to be. But I think that's going to drive the volatility. And I have a feeling that you're seeing a VIX of 1663 now, and it will probably be at least 50 cents lower by the end of the day tomorrow.
Mr. Alex, pride of place goes to you, sir. What do you think about the non-farms tomorrow?
I'm going to be a broken record. I think non-farms have a laser focus on them, and if they're surprised to the upside, we're going to have a big day up. Interestingly enough, I talked about the noise level here, and I don't know what's trading in after hours, but the noise level has just popped here. And generally that first run of after hours trading is foreign exchange. So the phones have just lit up. I from my desk, I can see a phone monitor. Something's going on in after hours. I unfortunately don't know what it is. The only piece of earnings we're looking at for Monday is Lululemon, which comes out on the 10th. So if you're going to position for Lululemon, you ought to be thinking about doing that tomorrow.
Lululemon, they of see-through pants fame. So a lot of men, big fans of Lululemon these days, I would think. Not so much the ladies, but the men definitely. Yeah, the dollar took a big move today, so perhaps that's continuing right now in the after hours right now, Alex, and perhaps that's what's contributing to that spike in noise. I'm sure we'll find out shortly, right after the show wraps up, exactly what's going on. But unfortunately, that's all the time we have here on the Option Block. I want to thank all of my cohorts, my partners in crime, for joining me on the show today. And before we go, let's check in with each of them to see what they have cooking that may interest you, the listener. Starting off with you, Uncle Mike, over there at RCM. What's cooking in the land of RCM Asset Management?
We got the webinar train going off again. We are going to have Jerry Woolert from Rebound Rabbits coming to do a webinar on the 20th. And we're excited to have him. And we have more to be announced in the near future. Stay tuned.
And Mr. Andrew, what is cooking in the land of the pit? Now that Mark is away, you can play.
I don't play much. That just means I'm running around with like a chicken with my head cut off doing wearing man. But I was gone for 10 days, so I made him do it all too. We have something called Option Pit Boot Camp. Do not confuse it with other boot camp titled shows.
Other fine boot camp programming on this network.
Yes. Ours is a 1-week boot camp, kind of an immersion, 1-hour classes, the end of June. Mark and I will be teaching it. And it's basically, we've had a lot of requests to kind of slim down our gold course, which is a a 4-month, very popular, mind you. It's sold out every month, but it's a very in-depth look at volatility and how options work, and trades to put on. And our boot camp will basically be a slimmed down version of that, and just look on specific types of trades and how to apply understanding volatility to those. And that will be the end of June. And you can go to optionpit.com and /mentoring or events and check it out and sign up. It is not free, though. It is not free. But I think people will find it very worthwhile. If you like the option block, you will like the Option Pit Bootcamp. That's all I'm going to say.
There you go, listeners. You can find out more over there at optionpit.com. And last but certainly not least, Mr. Alex, what is in the hopper over there at OX?
Okay, this Saturday, the team is live in Jersey City at the Hyatt Jersey City doing their traditional all-day. And for those of you who don't want to trek over to Jersey City, or you're in New York City and you don't want to go through the tunnel or over the bridge, we do it as a virtual event. Just come to optionsexpress.com. You don't need to be an account holder. Click on the education tab and you can participate in the virtual event. It's free and you can interact. You can throw questions in. I'm going to showcase one webinar, and that's Monday the 10th, where we're going to talk about new features on the site and our walk limit product. And I'm listening to Andrew talk about his challenges in getting filled here near the end of the day in an active market. Walk limit was designed for active traders or people who have a lot of positions on. And what it allows you to do is send an order into the marketplace, and it will automatically do the cancel and replaces to try to get you filled. I know that's not a broad enough description, but it's a great product. Every time I demo it, people like it. And from a time management standpoint, not only from trying to get a better fill, but from a time management standpoint, it's great for the active trader. And walk limit actually hit a milestone the other day. We've already done over 1 million contracts on it since we introduced it. So it's great for the active trader, and especially when you get moves like this at the end of the day where maybe you can't watch stuff because you got 5 positions on or you've got 3 screens open. And there'll be a couple hub webinars next week. We'll talk about those on Monday's show.
All right. Thank you for that, Alex. And on behalf of course, Alex and Andrew and Uncle Mike and myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program. And, of course, writing in with such great questions. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.